Sarud joins us for the Bourse Report on this Monday morning. Sarud, good morning, and I look forward to your findings. Welcome.
Good morning, GW, and good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the banking sector and two of our indigenous banks. Of course, we're speaking about Republic Financial Holdings Limited as well as First Citizens Group Financial Holdings. So let's just call them First Citizens for this report. Now, both groups would have reported improved earnings for the 6-month period ended March 30th. Or fiscal year period that rather ended March 30th, 2025. Let's take a look at what both groups would have delivered and what investors might expect in the coming months ahead. Turning first to that earnings per share figure delivered by Republic Financial Holdings, well, the group would have reported a EPS of $6.20 per share, a 1.1% increase from the $6.13 recorded in that prior comparable period. Driving that performance was an improvement in net interest income, up 6.4% from $2.5 to $2.66 billion. Overall operating profits also up 7.5% from $1.59 billion to $1.71 billion, with net profit attributable to equity holders increasing that 1.2% from just over the $1 billion mark at the same point last year to $1.014 billion overall. So good news in terms of some modest earnings growth and strong operating profit growth for investors in RFHL. When we take a look at reporting, or rather operating income for RFHL, we can see that there was also a consistent improvement across both that net interest income line, going from that 2.5 to 2.66 billion, as well as other income growing from 971 million to cross the $1 billion mark at the half-year point of each fiscal 2025. Of course, growing consistently over those past couple of comparable periods. So again, that is a positive driver for RFHL over the past few comparable half-year periods. Now, when we take a look at profit before tax by geographical segment, we note some significant changes here before eliminations. For example, Trinidad and Tobago in that greenish color would have declined roughly 30% from 1.989 billion in terms of profit before tax to 1.4 billion, roughly 20% decrease. On the other hand, Barbados in that red segment improved from 136 million, 64% to 224 million. Similarly, Guyana would have improved from 177 to 224 million, while the Eastern Caribbean would have declined from 138 million in that half-year period of 2024 in that bluish segment to 68 million in the half-year point of 2025, or roughly 50% decline. So some notable changes overall after including the effects of eliminations and other adjustments. PBT did in fact improve from 1.46 to 1.55 billion. For the group. Now, from a valuation perspective for Republic Financial Holdings, we can see that despite continued improvements in financial earnings, there has been some reluctance to move of that stock price to increase, or for investors to reflect that improved financial performance through improved stock prices. And we can see that when we look at the price earnings ratio of RFHL, for example, which is trading at 9 times price earnings ratio compared to the sector average of 9.7 times, and still offering investors a quite juicy dividend yield, like most other banking sector stocks, of around 5.2%, which is at the higher end of stock dividend yields rather, on the Trinidad and Tobago Stock Exchange. So at a price of 110.65, again, RFHL is trading at that price earnings ratio of 9 times, below the banking sector average of 9.7 times, with that juicy dividend yield of 5.2%. With those higher revenues in mind, modest earnings growth overall, but again, that continued geographical diversification and those relatively attractive dividends, Bourse is maintaining its overweight rating on RFHL for the time being with a stable outlook. Turning very quickly to FCGFH, or First, the group would have delivered an earnings per share figure or results of $1.77 per share, 2.3% increase from the $1.73 reported in that prior comparable period. Driving overall results was an increase of about 3.8% in total net revenues, up from 1.34 billion to 1.39 billion. Ultimately, profit after tax increased at 2.1% from 435 or 436 odd million rather to just about $445 million over the comparable period. Again, driving this performance was some more modest increase in retail and corporate banking of just about 1.3% from 523 to 530 odd million. However, there was a roughly 10 to 11% decline in treasury and investment banking result from 290 million to 258 million over the comparable half years, and a similar decline in terms of trustee and asset management PBT from 29 to 26 odd million overall before, again, eliminations and adjustments. Now, in terms of asset composition, we can see that there were some notable changes with a roughly 6.5% growth in loans to customers in that greenish segment over the comparable periods from 21.1 billion to 22.5 billion, 26 odd percent increase in terms of investment from 12.4 to 16.1 billion, with cash being utilized a bit more wisely and reallocated into some of those investments, as well as loan growth declining from 10 billion to just about 7.7 billion. No major changes to the other asset segment at roughly around 2 billion. So again, when you look at the balance sheet composition or total asset composition of first, we can see that there has been some reallocation into high yielding assets, certainly rotation out of cash, and continued loan growth over the past four comparable periods. So again, from a valuation perspective, first is at trading at 11.1 times price earnings. So it means that investors are paying a bit more relative to the sector average in terms of every dollar of earnings generated by first relative to its stock price, but offers a quite healthy dividend yield at 5.8%. So again, with modest revenue growth in mind, those improved earnings and that attractive dividend yield, as well as its valuations, Bourse is going to maintain an overweight rating on First for the time being with a stable outlook. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773, email us at info@boursefinancial.com, and of course, you can check out our website where all of our research is absolutely free at bourseinvestment.com, and you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, happy investing, stay safe, and we'll see you again on the Bourse Report.